Disclaimer: this is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. Our analyst panel has been on the money all year round, but I'm curious, what stood out to them the most in 2023 and what are their hot picks for 2024? Let's check in.
One of the highlights for me in 2023 was that significantly fewer companies mentioned COVID-19 in their annual and quarterly briefings. The COVID restrictions weren't completely removed in most places until the second half of 2022. So naturally, during that year, companies were still operating within that context. However, as 2023 rolled around, companies were able to operate with the usual freedom that they were used to in the pre-COVID times. And we started to see the easing restrictions flow through the financial statements, as well as the narratives around the numbers being reported, with fewer companies linking poor results to COVID. There was also the fact that NCB, which is the second largest listed company based on market capitalization, finally declared and paid dividends after a relatively long period. The company also reiterated its commitment to consistently pay dividends going forward, which is significant for the entity, as certain sections of the market were of the view that the non-payment of the dividends played a role in the decline of the share price. Now, looking towards 2024, there's a good possibility that rates could move lower, and within such a context, there are several companies which we're bullish on going into the new year. Wisynco and Kingston Wharves are two such companies, as they are fundamentally strong and they have both detailed significant expansion plans going into the new year. There is also Cygnus Real Estate Finance, which would have just about completed its second major project, which will deliver significant value for shareholders. And this is while the company is trading at a significant discount. However, you asked for a top pick, and for us that has to be Scotiabank. The group recently reported net profits of $17.2 billion for financial year 2023, representing an increase of 67% over the previous year, in a performance anchored by growth across all its business lines. Looking ahead, Scotia is well positioned to continue accelerating new business origination, as well as taking advantage of growth opportunities and making further investments in its core operations to enhance shareholder return. Now, as we enter a new year full of new opportunities, we at JNFM remain ready and capable to provide guidance and support for you to build and achieve your financial vision for the future. Come talk with us or visit our website for more information. I wish you all a wonderful 2024.
Happy New Year! I hope that 2024 will be a rewarding and productive year for you guys. Alright, so let's jump into the equities review for 2023. We all know that the equities market has been experiencing a downward trend since the onset of COVID. Well, last year was no different. We saw about an 8.5 percentage point drop in the market, and we saw all the composites being down as well. So with all this happening, we saw a few bright shining stars in the market. We had Trans-Jamaica Highway and Wisynco for main market stocks. All right, so for Trans-Jam, we saw they had a standout year last year. We saw where investors were willing to forego price appreciation opportunities just to ensure that they had strong dividends, strong and consistent dividends coming in 2024 and beyond. For Wisynco, they had a good year as well. They did well financially and they were rewarded with a 21% price appreciation in their stocks. So for me, both Trans-Jamaica and Wisynco has a lot of potential in terms of long-term prospect, and they represent good value for investors who are looking for medium to long-term investment opportunities. In the junior market, we also had two standout firms as well, Main Event and Lasco Distributors and Manufacturing. So let's look at Main Event. Main Event showed strong improvement in its results, and One would say this is due to their acceleration in the events planning, lockdown stops, so persons are out and about and enjoying themselves. So this helped Main Event a lot. Lasco Manufacturing and Distribution, it continued its performance well in terms of fundamentally, and that has transformed into or translated into higher stock prices for 2023. For the year ahead, I will have to agree with Mrs. Street Forest when she said that the equities market for 2024 will be a soft one. With interest rates being as high as they are, if they continue like this, then persons are going to be investing more in fixed income securities. Locally, there's the BOJ 30-day CD, the GOJ T-bill, which is 90, 180, and to some extent 270 days. So if these instruments remain high, persons will continue to invest in these instruments, and the stock market will lag behind in terms of its performance. For companies on the exchange, we expect that, their balance sheet will take a hit in terms of the companies that do have debt, because they will need to refinance their debt, and they will be refinancing at a higher cost than they currently have on their books. So that will affect their financials, and by extension, it will affect how investors view these companies in the market. So we have to keep this in mind that, we're going to see these things continue until the Fed and the BOJ look to lower it. Then as interest rate gets lower or trend lower, the equities market will start to pick up. Bear in mind that there will be a lag. We're looking at maybe a 6 to 9 months lag for the equities market to pick up if these banks do start reducing their interest rates. Again, have a productive and rewarding 2024.
Highlight for me was the Fed action. The fact that the Fed paused for 5 months is significant. I don't believe that we're starting a cutting cycle, but a pause phase could drive asset prices much higher for the next couple of months, because the market would have been taking some relief from the fact that the hiking cycle would either be de-escalated or stopped altogether. I believe that inflation is still a risk because of the issues in the Panama Canal and, of course, along the corridor of the Red Sea. Those things are inflationary. So we need to keep a close eye on inflation. We need to also factor in that a similar banking crisis could happen in 2024, given that the system is fragile. So that's a part of why I'm bullish on Coca-Cola to begin with, because regardless of the path of the economy, a company like that should still be able to perform in line with or outperform previous year's earnings. My stock for 2024 is Coca-Cola Inc. Company has high quality earnings, a dividend yield above 3%, and it has a beta below 0.6, which means that the volatility is lower compared to the market risk, which is 1. So it's 40% less volatile than the market. The return on equity is 41%, and the dividend yield is, as I mentioned before, very attractive. It's down 9.3% from the 52-week high, and the company actually owns more than 16% of Monster Energy drink. It has significant relationships with fast food suppliers, various strategic partnerships. It has an active share buyback program, which means that management is taking supply of the shares off the market, which means that it should increase the upside of the stock.
On the US side, with Ray Dalio, so a lot of us know who Ray Dalio is. Very successful investor, and he used to be the chairman and co-chief investment officer at Bridgewater, so one of the largest hedge funds in the world. So he is no longer in that position as the chairman and co-chief investment officer. However, persons still watch that hedge fund very closely to see what they're doing. And in the most recent 13F investor filings, which shows you the holdings of the different investments they have in their fund, the top 9 that they're having now are Procter & Gamble, Coca-Cola, Costco, Pepsi, Walmart, the S&P 500 ETF, and Johnson & Johnson. So I thought it very interesting, because when you look at all of those companies, you see that the fund is taking a very defensive stance, for want of a better word. And that's interesting to see, because right now what's in place, a lot of tech, a lot of growth, Microsoft being at all-time highs. That's really what's driving. So when you see a really large hedge fund like this starting to become a little defensive, it makes me wonder, is something coming? What will 2024 really hold? And for many investors, you may be thinking about what your investment strategy is going to be for 2024, or it should be. As you're thinking about that, you want to think about the balance. When we see large hedge funds being defensive, but the overall market still supporting tech and growth, which side do you want to be on? Do you want a little bit of each? Do you want one over the other? It's just some food for thought as you start thinking about what you want to do with your money and your investments for 2024.
Let's get this money.